Hello everyone. In this video, we'll be learning about the 4 pillars of accountancy. What are the 4 pillars? Asset, expenses, income and liability. Now we will discuss why there are 4 pillars, what do we mean by each term. Now see, 4 pillars of accountancy. Understand one thing. For any transaction, there can be only two types. Either it can be cash transaction or it can be non-cash transaction. We have already learned in the previous video that if it is a non-cash transaction, if the transaction cannot be valued in terms of money, we are not supposed to record in the accountancy. So we are left with the cash transactions. Now, if I write here that what can happen in the cash transactions, cash transaction. If I ask you, tell me a few cash transactions, what can those be? You will say, sir, you have made the sale and you received the money. Either you would have paid the rent, payment of salaries, or you have purchased the goods and services. So basically I can say that cash transactions can be broken into two parts. What are the two parts? The parts can be like, either there will be a outflow of cash or there will be an inflow of cash. There cannot be any other possibility. Now if I ask you, when will there be outflow of cash? You will say, sir, whenever you are making any kind of payment for, you can say, salary, rent or any kind of expenses, if you are making payment for building purchased, or if you are making payment to purchase a land, to purchase a furniture, then you can call it that there is an outflow of cash. So I can say that outflow of cash will be whenever there are payments. And when will be the inflow of cash? Whenever there will be receipts. We know what is receipt. Suppose I have earned an income from sale, or I have received a commission, or I have received sale from, if I have sold any kind of goods as scrap. If I am receiving the value, that is my income, or inflow of cash, that is receipt. Now understand, why do we make payment? You will say, sir, we make payment to purchase goods and services. Fair enough. So I can write here, we make payment to purchase goods and services. Can I basically say that I am making a payment to receive some benefit? You will say yes. So if I write here, payment is made to receive benefit. Obviously, we are not doing charity here. So we are making a payment to receive the benefit. We are sure that benefit will be received in some time, whether today or tomorrow. That's why I am making the payment. Now understand, this word is very important for us. The benefit. Why? See, what can happen? If I tell you that I am making a payment to purchase a particular building, will I receive the entire benefit right now? You will say, sir, if you have purchased a building, you will receive benefits in so many years. You will receive the benefit in this year. For next 2, 5, 10, 15 years, we will be receiving the benefit because we will be using that building. Like that for land also, like that for furniture also. If I tell you that there are 5, 10 employees working in my shop, then if they are working in my shop and after one particular month, they have worked for me for one particular month. Now on the 31st of the month, at the end of the month, I am making a payment. Which payment? I am making a payment of salary. I am paying them the salary. If I am paying them the salary, am I now supposed to receive any benefit further, or have I already received the benefit? You will say, sir, you have already received the benefit because those people have already worked for you. So I can say that you can divide benefits into two parts, that either I have received the benefits or I will be receiving the benefits in the future. So I can write here that to receive benefit I am making the payment, and there can be two again cases that benefit is received, or you can say benefit is availed, and here I can write benefit is yet to be received, or you can say benefit is yet to be availed. Availed is a better term, so we can use availed only. You can say that if benefit is already availed, what was the example we took? I have paid the salary paid, or I have lived in that particular factory, I have taken the factory on rent, okay, now I am paying the rent, so rent paid. So I can say if I am getting the benefit at the time of making the payment only, and I will not get any future payment, any future benefit, then I can write that it is my expense. If benefit is yet to be availed in future, for example, if I am purchasing a building, purchased building, land, computer, furniture, etc. If I say that benefit is yet to be availed, then I can say I will be receiving benefits in future also. Now come here the two important names, that is, if benefit is completely availed, then I can say this is my expense. And if benefit is yet to be availed in the future years, then I say this is my asset. To write a better definition, you can say if benefit is exhausted within 1 year or within the end of the year. What is the end of the year? That is 31st March. Okay, I can write here if expenses can be called as benefit exhausted, or you can say benefit availed before year end. This is our expense. Suppose I am paying the rent and then within 1 month I am living in that particular factory or we are working. So I can say that it is my expense only. Why? Because just before the year end I have completely used it. Okay. What will be the asset? If benefits are exhausted after the year end, or we can say whenever I am saying year end, you can assume that year end is 31st March. Okay. So if benefit is exhausted after the year end, that you are receiving benefit after the year end, then you can say it is your asset. To just give you a particular example, see, suppose this is our year end 31st March. Okay, and suppose now today we are standing at first, this is 31st March 2023, or you can say 2024 is the year end, and here is 1st April 2023. Okay, this is our entire year. Now suppose when we were doing the business on 1st January 2024, I have made a payment for my rent. Say rent per month was 5,000 rupees. Okay, and on 1st January 2024 I called my landlord and I told him I am making you payment of rupees 20,000. I am making you a payment for rupees 20,000 on 1st January 2024 for the future 4 months. 4 months will be which one? Entire January, then entire Feb, then entire March, and I have made him an extra payment for the month of April. Now understand very carefully. Our year was 1st April 2023 to 31st March 2024. Simple enough. I have made a payment on 1st January 2024 of 20,000 rupees. Simple. Rent per month was 5,000. So 5,000 for Jan, Feb, March and then April. Now if I ask you how much is the expense and how much is the asset, how will we calculate this? Look very carefully. How much benefit has been availed before the year end? This is my year end. If I ask you how much benefit we have availed before year end, how much will be the answer? From the 1st January to 31st March, 5,000 rupees for the 3 months. You can say this 15,000 is my expense. Why this 15,000 is my expense? Because I have lived in that building for the 3 months entirely, and as on 31st March, these 3 months are completed. So I can say I have taken the benefit of that 15,000. But sir, you made a payment of 20,000 on 1st January. On 31st March, we have received only benefit for 15,000. It means I can still live in that building for extra 1 month because I have made 20,000. So I can say I am yet to be received a benefit of 5,000 rupees, or I can still receive a benefit of living in that building for 1 extra month. That extra month what I can live there as on 31st March is called as my asset, because I have already made the payment but I have not received the benefit. Benefit I will avail in the next year after 31st March when the new year will start. That's why that is called as my asset. Understood? Every particular thing for which I have already made the payment but I have not received the benefit yet, that is my asset. Everything for which I have made the payment but benefit also received, that is expense. You can see from the top that I have made the payment, the cash is already gone, but if benefit is exhausted or availed in that particular year, that is my expense. But remember this thing, if I have made the payment and I have not availed the entire benefit, that will become my asset. So you can say from payment we get two things. First is expenses, second is assets. Simple. Now we will understand what is inflow. Understand this thing. Whenever there is inflow of money, inflow of cash, why we will get the money? Either we would have earned some money, or you can say I would have borrowed the money. Look, I can say here either I would have borrowed money or earned it. I would have earned some money. There can be only two things, borrowed money or earned money. It means I can say whether I have borrowed money or if I have earned money, how can I earn? I have to provide some goods and services. So we can say in outflow we receive the benefit, but when we are receiving the cash, we are supposed to provide some benefit. So I will write here to provide benefit. To provide benefit, you can think it like this. Say if suppose I am taking a loan from the bank, okay, now I have to repay that loan with the interest, that is called as to providing the benefit. Or if suppose I am a shopkeeper, I am selling goods, if I am receiving the money, I have to provide him some goods, right? If I am making a sale of goods, I have to give him goods, then only I will receive the money. That's why we call it that you have to provide benefit whenever you are receiving the money. Now understand this thing. Again, while providing the benefit, there can be two possibilities. What are they? Either you would have already provided the benefit or you will provide the benefit in the future. See, benefit is already provided. Benefit is yet to be provided. Understand this. Suppose I am a tuition teacher, okay. I have received 10,000 rupees from a particular student and he tells me, sir, please teach me for the next entire year, for the next 10 months for say, and he has given me the 10,000 rupees for the entire 10 months also. Now understand this, have there been an inflow of cash? You will say, sir, yes, you have received the cash. So I will say, I got inflow of cash of 10,000 rupees. Now I got 10,000 rupees cash. Can I say this entire thing is my income now? You will say, sir, you have not given any goods or services. How can you say that this is your income? Exactly my point. Understand? I have received 10,000 rupees cash, that is okay. But according to me, I am still supposed to provide him tuition services. Correct? If I have to provide the services, I can say that I still have a duty, I still have an obligation to provide the services, or I can say I am still supposed to provide the benefit. I can write here, when benefit is yet to be provided, I can say there is a duty on me, or you can say there is a obligation on me to provide the services. When there is a obligation on me to provide the services, when there is a duty, I can say this is called as liability. What is liability? When I am liable to provide the services to the person. Understood? Now think like this, again the same scenario. I am a tuition teacher. A student came and he studied for one entire month. After studying for one entire month, he paid me 1,000 rupees. Okay, now understand. Am I still supposed to provide him tuition services? No, because I have provided the tuition services for one complete month. Now he is making the payment. Now I am receiving the cash. Now there is inflow of cash and I have already provided the benefit. So I can say it becomes my income. When there is no duty upon me, I have completely provided the services. Benefit is already provided. It will become my income. Understood this thing? This is what called as the four pillars of accountancy, that is expenses, asset, income and liability. Now we will learn the concept of debit and credit. We have already learnt about the words debit and credit in the previous videos. We will learn what and how it functions. See, concept of debit and credit. Understand this. Suppose there is a number line and you can say 0, 1, 2, 3, positive infinity, negative 1, negative 2, negative 3, and this is negative infinity. Simple. This is the positive side and this is the negative side. Okay, this we already know. Now if we started from cash transaction, so I can say this is the positive side, and positive side, it means I can say if I am going from 1 to 3, I can say there has been an inflow of cash, I am receiving the cash. So I can write here inflow of cash, and if it is in negative, I can write here it is the outflow of cash. We are thinking from the viewpoint of cash transactions, okay, that whether cash is coming or cash is going out, whether there is an inflow of cash or whether there is an outflow of cash. Now what we learnt, when there is an outflow of cash, it means it's a payment. When there is a payment, what will happen? We will either receive the asset or we will incur the expenses. Whatever the case may be, we are receiving the asset or incurring the expenses. We know one thing, that we will be receiving the benefit. Now be very very careful. It means we are the receiver of benefit. Receiver of benefit. And we had already learnt this in the classification of accounts, that receiver of benefit should be debited. That is the reason why asset and expenses are debited. So I will write here receiver of benefit, asset and expenses will be debited. Again, if there is a positive inflow of cash. It means what? This is the case for income or liability. When we are receiving the income, we are supposed to provide some benefit. It means we will become giver of benefit. And we already know that giver of benefit must be credited. Giver of benefit must be credited. So from this you can say that asset and expenses when incurred or when we are getting assets, it should be debited. When income is increasing, when liability is increasing, we will say we have to credit that. So from this we can say the concept of debit and credit teaches us that asset, expenses and income and liability, it will be asset and expenses increasing and decreasing. Remember this, if asset and expenses are increasing, what will we write? We will do the debit. And if decreasing, obviously credit. Opposite will happen in the case of income and liability. When we are receiving income or when there is a liability increasing, we will credit, and if decreasing, we will debit the account. Simple enough. This is what the concept of debit and credit. Understood? This is very important to understand, because on this formula you can say entire accountancy is dependent, and the next few series what you will see, journal, ledger, subsidiary books, everything is dependent on this only. So you have to remember this. Okay, by this the concept of debit and credit ends, and these are the four pillars of accountancy: asset, expense, income and liability. After this we will be learning in more detail about these four pillars: what is asset, what is expenses, liability and income. Thank you so much.